morning, traders and investors. My name is Shen Mwangangi, your best market analyst here at HFM. And before I start, I'd like to let everyone know that this is purely educational advice and make sure that you do your due diligence when maneuvering the market. So, to begin with, today we have a special guest known as Quest Muyanga. And yes, Quest Muyanga will be joining us. Here he is.
Good
Nice.
morning, everyone.
Good morning. Yes. So you have Quest. How are you, Quest?
I'm well. How are you doing, Mr.
Yes,
Shea?
I'm excellent. All right. Now explain to us what do we have on the market based on fundamental and technical this week, and what are you looking at?
Okay, so today was a very interesting day simply because yesterday we came off the US job openings announcement. Now, the job openings came out less than expected. Sorry, that came out less than expected, which meant we have a weaker dollar. My sentiment or my position in the days to come is that we may expect weak dollar coming forward. However, today we have FMC being released in the evening, so we have to be quite aware of what's to happen. But if I was to look at things fundamentally, I would say a weak dollar is on the horizon. That will give us an aggressive move on all other players going forward.
Nice, nice, nice. I like that. So, yeah, it's true. Yesterday we had the job opening coming out weaker than expected, as Quest Muyanga said, and it influenced the dollar to be slightly weak. And today again we have FOMC coming out, and I can see, according to what they're expecting, is a 4.5. Quest. Do you think they're going to cut interest rates or hike interest rates or have a hold as they expect?
At this point in time, we're basically stuck between whether they're going to have hawkish reactions or dovish reactions. I would say at this point, they will most likely would maintain interest rates going forward, simply because we have seen dollar strengthening for the past couple of months, and going forward, this aggressive strengthening has been simply as a result of the UF tariffs, of the US tariffs, and simply the relation that has been happening on a day-to-day basis. Now, for this news release happening today, the expectation going forward is a weak dollar. A weak dollar is what we expect going forward, on my perspective. However, as you can say, you always have to be aware of things going either side. I will simply take a back seat and observe it and trade my trades on precaution of the days to come.
Nice, nice, nice. So just to echo what you've said you're expecting a weak dollar. So that means that you're expecting a cut on interest rates based on today's news. That's right? I think we have lost Quest.
Hello?
Yes, Quest. So I was saying, just to echo on what you have said, is that we are expecting a cut on interest rate because your outlook is to we have a weaker dollar, right?
Yes.
Ah, nice, nice, nice. Now let us go. Let us now move on to our charts. Which assets are you looking at?
I'm looking at gold today.
Nice. Now let us move to gold. Would you like to share your screen?
Absolutely. I would love to.
All right.
Okay. Before even having an outlook on gold, we should first put our focus on the DXY. Currently, if you look at the higher time frame on the dollar index, you can see off of technical analysis, we are at a point of interest. That point of interest is coming since because we had aggressive bullish reaction because price action was trading from a daily imbalance. Now, at this point of interest we have here, we can expect dollar weakening simply because on the lower time frame, the structure is being printed as we go along, which we can see the relation on gold has been convergently bullish simply because whenever we expect bearish structure in the dollar, we can expect bullish structure on gold. So going
That's true.
forward, gold has had aggressive selling the past couple of weeks. Now, this aggressive selling has been simply selling to fill the imbalances left when it aggressively sold the previous day, when it aggressively bought the previous weeks ahead. Going forward, we are expected to reverse and have bullish momentum to carry us in the weeks to come.
Nice, nice. I like your analysis, and that's true. Anytime we get a weaker dollar, gold seems to strengthen. And at the moment, we see yesterday we had some form of bullish momentum, slight bullish momentum on gold. And just to echo on what Quest is saying is that if we get that cut in interest rates on the dollar, gold will have some form of bullish momentum. Do you see gold breaking its all-time highs once again, Quest?
Absolutely, absolutely. Simply because gold, or the past couple of months, the past couple of since the year began, we've been having quite aggressive volatility. And the
Hmm.
problem with gold is that if you focus on the lower time frames, you may lose the picture or lose the overall point of view. However, when you come to the higher time frames, the story is painted quite clearly. Pardon if my chat is a bit all over the place. However, you can clearly see the overall momentum has been bullish, and we have been trading reacting from a couple of key points of interest: an imbalance at 31.73, an imbalance at 32.80. Now, you can argue we've had faced some quite aggressive resistance, breaking above 33, 34, 32. However, since price action has been relating in such a way that it is showcasing bullish momentum, we can expect to go above 33.43. And once that happens, we'll catch gold in the skies.
Absolutely, absolutely. That is actually true. Yes. If you just again to echo what Quest is saying is that if you shift now to the higher time frame and the daily time frame, you're going to reduce a lot of noise based on what is happening in the lower time frame. On the higher time frame, the overall momentum is a bullish momentum. And again, if you're going to get that cut in interest rates, influence it might influence the gold to move up. All right. So again, which other asset might you be looking at, Quest Myang, except from gold?
On currencies, we have something interesting I like to showcase over here. I personally like trading gold and some Asian pairs here and there. A very easy pair, I would say, to have analyzed structurally is the USD JPY. So currently, on the dollar against the yen, we have seen aggressive weakening originating ever since last week. Actually, not last week, yesterday, in mind. And going forward, we might have aggressive weakening on the dollar against the yen. Reason or case in point is simply because we had an imbalance left here when market opened and left a very big gap due to volatilities on geopolitical factors. Now, going forward, at the bare minimum, we should take out the previously formed low at 145.8. And if you have an outlook on the higher time frames, you can clearly see the imbalances and regions of interest left all down here. So overall target should be 145.5, but for now, you'll be able to at least comfortably say it should reach 145.8 before anything else.
Nice, nice, nice. I like your analysis. So just to okay, today we have interest rates on the dollar, and just to look at my economic calendar, I think we have interest rates also for JPY coming out tomorrow. Is that right?
Absolutely.
So how will this you have the interest rate for the dollar and you have the interest rate for JPY, and JPY is known for holding the interest rate for at zero point 0.5. So how do you think how do you think this changes is going to affect the market in the upcoming weeks and months?
When it comes to analyzing things fundamentally, I have this approach. Anything technical we observe is purely past fundamental data. So the fundamental data or the news being released today and case in point in the future is what will print price action for days to come. So when I come and look at the index for the Japanese yen, which is the JPY basket, I can clearly see we've been facing aggressive weakening on the months prior, ranging all the way from the month of April till currently where we are. Now, I want us to put our focus on this couple of days over here, which you can clearly see that I had highlighted a bit earlier on. We can see that technically now the Japanese index is showcasing strength of strengthening. I expect the interest rates to come and be released in line with this simply because technicals always follow fundamentals. However, at this case in point, what I expect is primarily strengthening of the Japanese yen and weakening of the dollar simply of a technical standpoint. Now, once America they do lower the interest rates and Japanese, even if they do retain the interest rates, we will still have the sentiment we held prior to taking over.
Nice, 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 nice. I like that. So your perspective is the perspective that we have right now is that there we have a cut on the dollar and either a hold or a hike in interest rate in Japan, right?
Absolutely.
Nice. So if we get that form of a cut in USD and a hold or a hike in JPY, how is this going to affect the currency like USD JPY?
That is actually quite simple. Well, how that will affect this currency pair USDJPY is simplistic in nature. We'll now come down to the technical side of it. We have our data, we have our news, we have everything we need. The moment it's released, then we can be able to anticipate. For example, if our expectations are met, we can expect aggressive weakening on the dollar against the yen. And our targets, as discussed earlier, primarily should be till 145.8. Now, this may take a week or so, a couple of days to happen, but eventually the outcome shall be reached. That being said, if those news releases happen as expected, we can expect aggressive weakening on the dollar against the yen. Simply because at this point in time, our technicals are aligning with our expectation of fundamentals. The moment we get the go ahead and we get the green light, we can go aggressive on this pair.
Nice, nice, nice. I really like your analysis, and I know for those who are watching us live, they they're absolutely understanding what my friend here, Quest, is saying. And Quest has been a trader for more than 3 years, and let me tell you, we can trust his analysis. For those who now, for those who are seeing how he's analyzing, I know you're going to your charts, looking how the charts are moving. You're also looking at your economic calendar. Remember, HFM has its own economic calendar. You can rely on it to give you reliable facts based on what is happening in the market. So I think with that said, we have analyzed the economic news that is coming out today. That's the interest rates, and also we have analyzed the gold. We have analyzed. Sorry about that. We have analyzed the gold, we have analyzed USD We have seen how different interest rates will affect currencies like the USD and the JPY. So I think with that said, we have done some good analysis for you. And now it's your turn now to go and make sure that you have done your due diligence and look at the charts and make sure you are aligned uh, with the perspective and the with the perspective and with the alignment of what we have discussed today. With that said, thank you, Quest, for joining us. Quest is one of the best traders that we have around. He's really good at his analysis. As you've seen, there's no need of explaining much. Thank you, Quest. Thank you for joining us, and hopefully, we'll be seeing much of you as we move on forward.
Absolutely.
Absolutely. Yes, I'd like now to introduce questions. For those who have questions, they can drop on the chats and we will both answer the questions for you. And as you type your questions, I'd like to let everyone know that we have our physical classes continuing, and today we're discussing about fundamental analysis beginning at 11 a.m., all the way to 12:30, and also we have our online classes beginning at 3 p.m. Yes. So with that said, all right. With that said, I think okay, as people type their questions, remember we have we have some few days to go for our trade gold drive bold event to end. Make sure that you're trading gold. Quest has given us his analysis on gold. You can jump on that. And also, Quest, I can see we have a question asking, what's your thoughts on NFP coming out on Friday?
Aha. With NFP, I would say I would like to share a very simple metric on how to analyze NFP. NFP is simply indication of the job market in the American economy. However, beforehand, we have a couple of these data that come out that give us a slight indication of what to expect. Number one happens to be ADP NFP. ADP NFP is simply NFP excluding the private sector and the farming industry. Once that
Mhm.
comes out today, actually, we will have a clear indication of what to expect with NFP. After that, another thing we can look at is the jobs data. We had job opening come out yesterday, and we also have unemployment claims coming out on the same day as NFP, if I'm not wrong, right? Now,
Mhm.
once we have clear indication of those pieces of data, we have an indication of how many people are in the farming industry, in the economy, excluding the farming industry and the private sector, and we have how many people are filed for unemployment. Then we can have a clear picture of what to expect. However, my thought process going forward still remains the same. I do expect a weak dollar, so I do expect the numbers on FP to come quite lower than expected, and then from that point on, we will have weak dollar in the markets. That will result in concurrent moves as aggressive buying on gold, aggressive buying on any pair against the dollar, and aggressive selling on any pair with the dollar.
Nice, nice, nice. And do you think uh today's interest rate is going to affect NFP coming out on Friday?
Absolutely, absolutely. Simply
Mm-hmm.
because I would like to think all these constant fundamentals are all correlated. It's a matter of how their interests, how they want to perceive the economy going forward. However, from that point of view, if the interest rates are lowered, okay, interest rates are
Mm-hmm.
lowered, that's encouraging people to be able to have take loans, engage with the economy, and have more free flowing currency in the economy. That may result in NFP numbers being either hawkish or dovish in that aspect. But like to say I would like to take a back seat and wait and see the overall thoughts before the release.
Mm. I like that. I like that. Chilling and waiting for the release. That's actually a good strategy. So, so thank you, Quest.
Absolutely.
Yes. For those who like to know about more on NFP. We have the NFP live analysis here in Kenya. For those who are in Kenya, we are inviting you to join us for our NFP live analysis this coming Friday. We'll be in the office from 2 p.m. all the way to 5 p.m. doing this analysis, analyzing, and we might get again, we might have Quest as our invite, who is going to help us understand and also we might do a live trade. So make sure that you are here in the offices. Our offices are at Westlands, Nairobi. The building is known as the Oval Building. We are at fifth floor. So you are free. The registration is absolutely free. Only have your HFM account registered. Yes. Mhm.